Karolina, thank you for joining us. You are widely recognised as a trailblazing entrepreneur, and you've recently added author to your long list of career achievements. Thank you so much for chatting to us, and we can't wait to hear your private capital perspectives.
Wow, that was quite an intro. Thank you for having me.
So, can you tell me what first led you into the world of gaming and then led you to found your company?
I think it's an interesting part of my story because I wasn't actually led into gaming. I started working in a land-based casino as a job to support myself through university, and I literally just never left, you know. But I think it's that experience that eventually 20 years later led me to found BeyondPlay, because the product that I set out to build as our flagship product was very much inspired by what I've seen in land-based venues and then on the cruise ships where the career has followed me to. So that's how I ended up, you know, founding the company focused around multiplayer, around shared experience and social aspect of gaming that was not there before.
Yes. Now, gaming has a reputation as being a real boys' club. How has your experience of that? How have you managed to navigate that as a female founder?
I mean, I've been navigating this for many years before, so I think by the time I reached the founder level, I was so used to the domination of one sex in the industry that it wasn't really a scary experience for me. And I have to say, and I always try to make it very clear, that even though I did navigate male-dominated spaces, I never experienced any actual discrimination. I was always given equal opportunity, which is why I always stand there and defend the industry and show it as a great place for women where they can have a lot of opportunity if they only give it a chance. Now, what I was new to is the investor profile. You know, when you look at the industry as gaming, that's one thing, but when you enter the space of being a startup founder, every investor you pitch, every VC you pitch, pretty much every legal firm you work with, and kind of all your ecosystem is still heavily male dominated, right? And that does impact on your confidence, because you're not just working in that environment, but you're selling yourself in that environment, and you need people to understand you, and within certain elements, it would have been easier to have an ally in a form of a female investor or a female VC partner, you know, who is there to listen to my story and what I'm trying to achieve.
Yes. I mean, from my experience, actually, of seeing you in action and negotiating your deals, I felt that you actually used your gender and your identity as a powerful negotiating tool, and you absolutely stood out in a crowd of in a male-dominated crowd, and I think we're able to get your point across all the better for it.
I think I did stand out, but I always try to be very not to come across as someone that gets to their goal by being a female founder or a token entrepreneur, you know. But I think it's also the fact that I worked so long in a male-dominated industry that helped me develop certain masculine traits that were very helpful in the entrepreneurial journey, because whether you like that stereotype or not, you need to be a very strong personality if you want to secure investment. You need to have built-in confidence and you need to have a lot of resilience. These are traits that not all women not have, but have full confidence in those traits to be able to showcase them. For me, because I had to exhibit those traits already for so many years before, they came naturally during the negotiations and, you know, during the whole investment securing process.
Yes. So we've known you from the point at which BeyondPlay was starting off as an idea, and I remember being there at the point when the company was first incorporated, and you've scaled it very rapidly from a seed round through a Series A round and eventually to an exit in a remarkably short space of time. How do you reflect on that experience?
I mean, it was incredibly hard. I can't describe it with any other words that grind, hustle, and unsustainable working hours. But I think it's just I spotted the opportunity for fast growth with the company and I went full pelt after it. What did help is the fact that I had a law firm like yourself in my corner, because quite often, you know, in order to save costs and try to get through shortcuts, people use the template type of solutions for their legal issues. Our situation was different because it got complex very quickly. I mean, we had a publicly listed company on the cap table, which required certain level of governance and professionalism. So we sort of stuck to using a recognized law firm from the beginning. But it is what, in the end, made the exit in such a short amount of time possible, because the exit it was not just the exit that happened remarkably fast, but it was also, you remember it well, the due diligence process that was less than 2 months for a company that, you know, is a multi-billion-dollar cap company on the market. They don't do 2 months deals. But because we were so well prepared and so structured and organized with your help, it was a matter of pick and drop, right? So still a lot of hours and a lot of work, but it made things way more straightforward.
Good. We worked with you across several areas of law beyond the pure fundraising and exit. Do you think founders sometimes overlook those other areas?
I don't think, I know they do. I advise probably 5, 6 startup founders in a very early stage right now. And there are many areas that founders overlook because of the same reasons. Cost saving, and I'll think about it later, you know, we're too small for that. I think in my case, it wasn't the fact that I was so brilliant at predicting that I need to look into those areas. It was just circumstance that pushed me into looking the areas. And some of those lessons I also learned the hard way later on, right? But I think the couple of areas that founders very often overlook is the very early advisor agreements. Quite often it's a handshake and, you know, it's a friend involved and we're just going to be, you know, helping you out when you need us and we'll figure this out later. And then the figuring out later often leads to massive conflict when bigger valuations and share prices are involved, and you haven't...
when shares are involved.
Exactly. So I always say to founders, and similarly with myself, I don't do handshake advisory deals. You want me as an advisor? I'm going to send you a packet of documents that you should look at, you know, what kind of percentage you should be giving to advisors, what kind of lock-in periods and so on. And that leads me to another thing, which very many founders don't look at leaver provisions. You and me, you know, smile when we talk about it, because it was something that saved my situation many times, you know, later. The fact that we had them structured past the good leaver, bad leaver, but we had quite a few other definitions in place that would cater to the situation that can occur in any business, right? So I always pointed out to founders that it's an important part, that it might not seem relevant right now, but things that are in small print that ChatGPT is not going to point out to you when you put your investment agreement into it is the small print that matters, you know, the consent matters, the warranties. I always thought it was legal language and whatever, but it turned out later that there were very important points that we have looked into, you explained to me, and I could take an aware and conscious decision of what I wanted that small print to be.
Yes, I couldn't agree more, and you always showed a very keen understanding and willingness to understand and learn about these important points.
And it became useful later.
Yeah, of course. You took a commendably active role in the negotiations around your exit. Can you tell me a bit about why that was important for you to do?
I mean, the reason for that is very simple. BeyondPlay was my baby, you know. It was an idea born out of nothing, based on 20 years of my career, and I never planned to sell it in 3 years. I wanted to take the company to 4 times the valuation, you know, much bigger revenues, and I knew I could. And we were in a place of fast growth and things were starting to happen for us. So when this acquisition opportunity came about, I needed to make sure that it's on my terms, because I wasn't desperate for it. Obviously, once the first term sheet landed, I was excited because it was still a life-changing opportunity for me, for the team, and a very acceptable return to investors. But I needed to make sure that certain elements of the deal that I discussed in private with the buyers are going to come through in the actual contract, and that there's not going to be no swaying. One of the important things is that I didn't want to have an earnout. And I still say to most founders that if you can negotiate a different battle to pick, make sure that earnout is not something that you agree to, especially if your circumstances are such that you have very little control in the future of what your revenues and profitability of your business is going to look like. Because I think the conflict around earnout and the misaligned goals and objectives can put a very ugly twist on your success story and on how you're parting with the company eventually. So that's why I wanted to be at the forefront of this. And if something went wrong and in the future I would look back at it with regret, I wanted to be the only person I can blame for it. I didn't want to point fingers anywhere else. I wanted to take full responsibility so that I can have full accountability of it in future.
And you use this word of responsibility. I felt you took responsibility for all of your stakeholders, and you took that seriously, and your drive to negotiate that deal reflected your sense of responsibility towards the people who have backed you and worked for you.
Yeah, don't get me wrong, I had a great level of support from you guys from the legal perspective. Again, I at the time thought that I was probably not a problematic but a high maintenance client for you guys because I wanted so much detail around every single line of legal language in a contract. But it did help me because I was making decisions informed, and then I had great supporters on the board and from some of the angel investors who were there on speed dial anytime I needed something. So yes, I stood at the forefront, but I did make the final decisions, but they were always taking in consideration the varied perspectives we had within the stakeholder group.
Yes, you had always taken care to build a good team around you, and when you were choosing your investors, you did make a point of choosing those who would be able to contribute more than
the
capital.
Actual strategic value that every investor advertises as their strength.
You had a lot of trusted friends and advisors around you.
Yeah, absolutely. People that are still friends and advisors on many different areas to this day. I mean, the investors that I had on my cap table, I now help them with advisory around their deals. I facilitate deal flow for some of them. So these were relationships that I played right back then, and we ended this journey with a very positive outcome, but our journey or relationship didn't end there. It now evolved into new ways of working together.
You have always struck me as a founder who looked for more than just financial capital when you were going out to seek an investor. And I think I remember you having turned away some investors because you didn't feel that they would be the right fit in terms of expertise or what else they could bring to the table to help your company grow.
Yes, and this was hard because in the industry that I operated with, which is gaming, and the investor pool that invests in that niche industry is already quite small and restricted, especially when you add the regulated markets approach that we had, So when you have such a small amount of people to reach out to, turning down some of them feels like a suicide mission, but it was exactly that. And this is also a big advice I give to founders now. It's not strategic value you're looking for, because every single investor out there does have it on their website that they bring strategic value. But you really need to get to know those people to some extent on a personal level and ask them questions like, what kind of returns are you looking for? Because when you're dealing with a VC, that's a little bit more obvious because you can base it on, market standards, right? But when you're looking with angels, you just don't know. And I think that alignment of what is going to happen if I decide to sell my company before it's a 10x return for you? Where are you going to stand in terms of support, acceptance? I think it's a very important question that can save you a lot of heartache later on. So that's big part of advice I give to founders, how to position yourself in a conversation with investor where you're not in this low position of power, because as founders often we feel that we are the begging part and they are the big influential players, so we mirror that dynamic, but it doesn't need to be like that, especially when you think of the fact that there is a lot of portfolio companies that are underperforming, and you could be the one that is actually saving the whole portfolio, putting it in the right color. So just give yourself a bit more credit sometimes in those conversations and not always come across from that, because no one is there to condescend you, It's an equal conversation. And I didn't know this at the beginning, but I learned that because I had investors who treated me as equal. So
Yes.
that carried through to my new conversations.
I think it's great advice. So with BeyondPlay, you were developing some novel and innovative technology, particularly in the multiplayer software space, and your brand was also very important to you. There were therefore a lot of important intellectual property considerations that we had to, that you had to face and that we were able to input on. And this is something that technology startups face all the time. Can you share some of your experiences in intellectual property matters and why this is so important?
Well, one of the main one for me is trademarking, which is, again, a lot of founders think that they don't need to worry about it while they're small, they're only going to worry about it later. But it's sometimes less of a risk to you, but there is also the cost of the opportunity, because you don't know what new innovative things you're coming up with, and your name might as well be desired by someone in the future. And if it's a big company, the fact that you have a website and you have this on your LinkedIn page will not protect you enough, right? And I just feel that trademarking your company names, especially if they are something that is not completely random, like a combination of couple of words and syllabes that it's difficult to replicate, is important. And I learned this in a great way because I actually sold the trademark to the first name of the company, which you were involved in. And it's a surreal type of story that completely changed the trajectory of the company because it was a large transaction. And the fact that I had the trademarks stem directly from my previous experience, because I used to work for a company that sold IP. So I dealt with both patents and trademarks. And which is why immediately when I started the company, I think I did it even before I incorporated the business. I trademarked in all possible classes. But the interesting part of this was also that sometimes don't trademark just in what you have right now. Try to think a little bit bigger, because your product might span out or grow into something you didn't predict, and then those classes might be taken. So I would assume that the trademarking cost isn't that high, that you shouldn't consider it part of your early budget. Now, the second part of this is a contrary, because when it comes to patenting, I was of similar opinion as with trademarking, that do it early, especially if you're working on innovation and it's an important protection for your business. But what I've learned on that one is that it's such a lengthy and complicated process that requires so much of your focus, not just yours, but your CTO, often even developers. And there is multiple communications back and forth between yourself, the lawyers, and the patenting authority. And at the end of the day, if someone decides to copy you, you'd have to take them to court, and you'd have to spend hundreds of thousands of pounds in legal fees to get to that stage where you can defend it, right? So sometimes I think that part of the process is only when you have something that the lawyers will advise you on, that it's impossible to slightly adjust or slightly iterate on. Because the best example is game mechanics in actual games within my industry. That cannot be patented because it's a mechanic part, and the only part that can be patented is if you tie it with a specific name. So I think understanding of that before throwing yourself fully into this complex legal project is important, so that you can decide whether it's really worth it for you.
Startup founders are often so consumed with everything to do with the business, feeling as you did great responsibility for everything around the business, that they don't have time or they don't have energy to think about their own personal position. And when contemplating an exit, which can involve a big capital event, this is an important thing to do. It's something that you were very aware of from an early stage, and you did come and enlist our help with looking into your own position and your own holdings and structuring. And is that an experience that you would share with other founders and you'd recommend them to do?
Yes, I would. And this is a controversial view, because quite often I get challenged with, how can you think about an exit when you're just starting the company? And in my view, it's like, how can you not? I mean, I understand that the company can evolve in different ways. Maybe it's going to be a highly revenue generating business paying a lot of dividends to stakeholders, and you don't ever want to sell it, but you just don't know. And I think that you should be prepared for both situations from the beginning, because certain things are difficult to unravel if you look at them too late, and your personal situation is one of them. Another one is the type of equity you give to people. It's very relevant to the tax jurisdiction that you operate in, and it could be optimal for employees, or it could be something that is actually worth very little to them if you do it wrong, right? So I think not just your personal position, but also the position of people that are your partners in the business that own equity is important, and it will be important to your investors too, because investors consider various tax schemes, whether that's UK, US, and these days we live in such a global startup ecosystem that is very rarely that your investors will be based in just one country. So you should be aware of what benefits they'll be able to take advantage of. You should be aware of where your company is best placed to serve your customers when it comes to taxes on the commercial side. So I think that you need to have an exit at the back of your mind from the beginning, and maybe not as your main focus, but as big part of a focus. And that also will build credibility with investors, because they will be looking for exit eventually, right? So it's being aligned on that level without being overly focused on that alone.
That's very interesting, drawing the two strands together, and actually it's all part of one picture.
Yeah.
So after the exit, you have founded HerPlay, which is your investment and mentorship platform, supporting founders, and particularly female founders, I think, across a wide range of sectors.
Yeah.
Can you talk to us a bit about HerPlay and what's the driving force behind it?
So it goes back to my need to pay it forward somehow, because I feel I had such great support around me, not just from the people who are financially invested in the business, but a lot of my friends in the industry that have been entrepreneurs and successful businessmen, and they were always there for me to call and give me advice in those early days. One of the people who helped me found the company, Tony, he was there with that encouragement, and he almost physically stopped me from taking a corporate job when I failed with my first startup attempt, right? So I wanted to be that someone to other founders. And another part of this was the fact that, as we discussed, I had very little role models when it comes to female entrepreneurs. These days they are being given a bit more spotlight, and there's more of them, but 5 years ago, there still hasn't been many. There are no startup books written about, female founders or series on Netflix. So I wanted to be that person that they can look up to. I thought I had a great story because the company was sold so fast that it drew attention, but it also was very clearly connected to the 20 years of building my skill set and confidence and connections to be able to do the startup. So it's a empowering story to give an aspiring or early stage founder the right amount of belief in themselves, and I wanted to use that. So that's why I founded the platform. I invested in 3 female founded startups. They all in the space of impact. I'm an advisor in more than 5 startups, including some in the game development. And funny enough, the advisory roles are all within startups founded by young men below 25, which for me personally, it's a sign of times changing, because for them to come to me to become their mentor and to become often their only strategic advisor at this point, where they give me equity for being part of the business, shows you that for them gender doesn't play a role. I'm someone who they see as a successful entrepreneur, and they come to me to be part of their vision and to help them, guide them through those early days, which I think, without being overcritical, with men my age, you wouldn't see that so often.
That's a very interesting point.
It's just a different way of seeing. I think they grew up in very different environment, and they have less of the subconscious bias.
Are there any particular gaps or niches that you've noticed or identified during your journey through private capital that you think could be opportunities for the future?
Yes, and I think it's a paradox, because you're looking at 2 parties. One is heavily involved in emerging tech, and I'm discussing specifically the journey within tech, and the other one is heavily investing in emerging tech. And yet their interactions with each other are legacy, old-fashioned, and tech-free. So
Right.
I think that that's a massive opportunity. And I wanted to do something in the field myself, and I might still do. So I'm giving this idea for free for someone that want to do it before I recover from my startup PTSD. But I just think that finding investors based on certain criteria should be easier. There should be more automation. There is AI now that could be used to great extent. I've had many conversations with investors where I didn't know the size of their tickets because I was too intimidated to ask, and I would have not optimized my time correctly for not the right size of investment. I had multiple conversations with investors where they wanted to be the secondary investor. They wanted someone to lead. But I didn't know who are the investors who like to lead or whose preference that is, So I think there is almost like a space in the industry for, call it gamified dating app for the startup and private capital ecosystem where, and I understand that each VC will have different term sheet conditions, but eventually it's all going to standardize because, again, we have ChatGPT now, and founders can very quickly drop their term sheet into any AI and say, point out any not startup clauses in here, point out any signs of bullying in here, point out anything that I should negotiate. So I think eventually we're going to come to a situation where most early stage deals are going to be done on very similar terms.
Yes.
And in that way, there is nothing holding back that private capital to put it up front. So it's available on your website to be scrapped into an app where I can literally put in, I'm looking for lead investor and I'm looking for a co-founder with the following skills, and I'll find them within the community of people. Obviously, an app like that needs a lot of liquidity, so it's not an easy build, but I definitely think that we're going to be seeing more automation and more seamlessness in the process of raising capital and then in the process of maintaining the relationships with that private capital once they're involved.
Yes, which would seemingly be a sort of democratizing move. Karolina, it's been fascinating to discuss your journey and your achievements in your career so far. I just have to ask, what's next for Karolina?
So, as I said, I'm involved in quite a few startups as an investor and strategic advisor, so that keeps me pretty busy. But my next year is all about the book that I've written. I mean, similarly, in a way where I founded BeyondPlay, I knew from the beginning I wanted to sell it. Similarly with the book, I didn't write it to rest on my shelf. It's getting published commercially in June next year. I want it to be a national bestseller, whether that's UK or US. And I want a TV series around it. So, some of them are big dreams, but I'm of the belief that if you don't dream big enough, there is no point to dream at all. So, the book is something that I'm fully committed to. I think it's a very empowering read. So it's also,
I agree.
Other than just an ego project for me to finally pour my writing talent on paper, it is really fulfilling to me to get feedback from it because I get messages, it's now over 400 people that read the book, of how much it inspires them to start the journey and keep going. So it's something very dear to my heart, and I'm definitely going to be focusing on that in the short term. And long term, you might see me developing that app for private capital, or I have a couple of other ideas within the field of AI, impact, mental health, wellness. These are the fields that I'm interested in these days, so I just need a bit more of a break.
Well, I can confirm that the book really is a compelling and inspiring read, and we do really wish you all the very best in the next endeavours.
Thank you very much.